Good afternoon, everyone. I welcome you to the webinar on Future of FinTech in a post-pandemic world. This webinar is organized by Exhibitions India Group and presented by FinTech India Expo. Now we have with us a very experienced speaker to share their thoughts and insights. We have Nalin Bansal, he is Head Rupee from NPCI. We have Radhika Binani, and she is a Chief Product Officer from paisabazar.com. We have Sayali, she is a co-founder of PaySense. We have Neha Mehta, she is a founder of FemTech Partners. And we have Akshay Mehrotra, co-founder and CEO of Early Salary. The session will be moderated by Mushir Ahmed, he is the Managing Director of FinTech Asia. And this is a 90-minute discussion. Attendees are requested to send their question and answer through Q&A box, and we will take questions towards the end of the webinar. So Mushir, over to you. We don't see, okay, Nalin has joined. I'm just following up with Neha, but in meantime, we can start.
Sure. Thank you so much, Aarti, for having us. And it's good to see everybody here. My name is Mushir. I'm the founding member of the FinTech Association of Hong Kong, but more importantly, now the Managing Director of FinTech Asia. We are an advisory firm looking to provide strategy help for startups who are looking to expand across Asia Pacific. Now, this topic that we are speaking on today is quite relevant in terms of looking at how the post-pandemic world is going to look, as well as what has FinTech been able to deliver during COVID-19. Although we are not yet fully out of the pandemic in India, I think there is a good possibility and hope that we will be out of it in a few months' time. Now, starting off with, I think, key elements for us to evaluate is how have we been able to enable financial inclusion through digital platform? Has that actually been achieved during COVID-19, or have we actually had more financial exclusion due to the pandemic and not being able to enable people to join the various digital inclusion activities? Number two, I think, is also for us to consider whether e-payment services have been reliable as well as effective. I think we have seen an uptick in the numbers of users who have been using digital services for a variety of different applications. We've also seen both the government, all the way from the Prime Minister as well as the RBI Governor, actively promoting use of digital services to avoid physical contact. And that probably is going to be a big revolutionary change in India. Now, when we look at our country's number, over the last year, you have seen an addition of close to 200 million people onto the usage of internet, right? We're close to now, I think, about 650 plus million people, so 65 crore plus people who are using internet, of which 50% are actually from rural India. Now, that's a big number and a significant number, because previously the growth was largely driven by urban India, but we are now seeing rural India being enabled. We have the telco providers led by Reliance Jio, who have been providing data at the cheapest costs across the world, right? And that actually has a big impact on being able to enable people not just to use financial services using mobile technology, but it's also as a leapfrogging, because it's providing a majority of them with an access to financial services they did not have. As per a recent survey done, about 80% of all Indians do have a bank account, but a significant portion of them don't actively use their bank accounts or use digital services to access their bank accounts. I mean, the Jan Dhan account was a big game changer while providing financial inclusion and cutting out the middlemen for subsidies and other such things for over 50 crore people. But now that we've had Aadhaar based authentication, largely the build of the India stack, which is probably the pride and joy of our country's technology and being exported now in other countries, we now have to build for the next phase of India's growth, and for not just financial inclusion, but also to drive those people who are coming online to be able to use financial services to ease their burden, reduce the cost of access, but also to ensure that they can do it in a simple way and not complicated. And that's where apps like Bheem, etc. have played a good part. So this is, for me, the key elements that we're going to be talking about. The use of different technologies that are enabling financial services through technology and fintech will be another conversation, especially talking about how artificial intelligence, machine learning based on big data plays a role in this. We can also potentially talk a little bit about how blockchain is having a bit of an impact. And we're not talking about crypto, we're talking about pure blockchain impact in a variety of authentication as well as distribution applications. So what we will start off with is I would request that we have our speakers briefly introduce themselves and give their viewpoints on the overall topics. Once we hear from each of the speakers, we'll speak for 5 to 7 minutes each. We will then dive into the panel discussions, which would be for about 30 odd minutes, and then we will take your questions from the audience after that. So I will probably start with ladies first. So let's start with Sayali, who is co-founder of Patience and is on the call as well. Sayali, let's start with you.
Thank you, Mushir. Thanks for a wonderful introduction to the overall topic. Hi, everybody. I'm Saili. I'm the co-founder of Patience. Patience is a consumer lending startup in India. We have been using digital technology and data science to do consumer loans for the last 5 years. We were back at the end of 2019 acquired by PayU, which is a large MNC focused on fintech and credit and financial inclusion. So Patience is now part of PayU Credit. So that is my background. For the last 5 years, building this consumer play has given me a lot of insight into different consumer segments in India. And what I would like to talk about today is that while we are looking at the current stress, the COVID-related stress, the moratorium-related stress that is causing several banks and NBFCs to go into deep thought as well as deep survival exercises, there is a lot of future opportunity that is coming to light here. So while these times are extremely tough and they're tough for our consumers, they're tough for the NBFCs, but I think there is a lot of options coming to light now. One is digital adoption, and I think we'll hear a lot of great things from Nalin and NPCI later. But what I'm seeing is that majorly there are two changes. I mean, while a lot of us were building products that were inspired with the idea of financial inclusion, we found that a lot of people still did not manage to discover them, still did not engage with financial services that were digital, and continue to engage with physical, local players in the smaller towns and rural areas. However, that is changing. So while Patience was live in 60 cities, we still saw a bulk of the business coming from the urban areas, but that is now going to change across. I mean, if I talk to e-commerce players, if you look at NPCI data, you'll see that more and more people from smaller towns and rural areas are now engaging. They're discovering services which are always designed to help them get better access. They're discovering them now, and they're willing to engage with them now. The willingness to engage was very weak before, but now there is willingness to engage. Along with that, another consumer behavior which is very prominent in India is do it for me versus do it yourself. So wherever the products are being created, however slick they are, however well designed the UX is, a lot of consumers would still download the app or start the application process, leave it midway, and then wait till somebody assists and gets it done for them. However, that behavior also is going through a change. People are willing to do it themselves because I think they're doing a lot of it themselves now, starting with work in the house, but also work for themselves that they would otherwise not have done at all. They would have waited for the bank guy to come to their house and sign up their forms for simple things. They would go stand in line and pay their bills, and they would think it's a simple exercise to do so. But now they're changing to try out all the UPI apps and see how bill pay works. They're going to try out how to invest in a mutual fund sitting from home. They're trying out how to explore credit options sitting from home, and so on and so forth. And that behavior to me is very, very heartening to see that the digital adoption is really, really happening in India. So I think coming out of this very tough times, we will see a lot more engagement from these 65 crore people who are using the internet, and I look forward to bringing them on to really good products and services that people have been building. The other thing that along with this, I think about a lot is underwriting. I think a lot of underwriting models were being built and tested over the last few years that FinTech has really started to try and increase the number of consumers who can access structured finance. But while that has been happening, I think a lot of it will now have to be completely relooked at. I think instead of looking at a static point in time bank statement, it will be far more useful to look at a flow. And I think there again, the developments on the India Stack side are very, very interesting. There is a Threads platform where invoices can be matched. There is the GST APIs, which are everybody is looking forward to. And all of these will bring the MSME and SME segments forward, and we can serve them. When the GST numbers every month are going up, and because of that, we'll be able to see people coming into the structured economy, people coming into the formal finance options world. And I think they will all benefit from that. They will get more working capital options. They will grow based on revenue financing models and other flow-based lending models. And I think if MSMEs can come back out of this with help from the government credit as well as the banking sector and the fintech sector, if they can come out of it, then we can all come out of it because they are the backbone of our economy. I think that's what I'm looking forward to. Other than that, I'm very excited about the rallying cry to build in India. I mean, because of difficult political situations, but because of also the Atmanirbhar campaign that is going on, I meet a lot of people who are from various parts of the world. I also meet people who are founders in India, and I really love the excitement about build in India. They come back home, let's build, or let's build world-class products here. And that excitement is palpable, and it's really, really heartening to see that. So I'm excited for all these reasons. And I hope to hear from everybody else, and then hope to have a more interactive discussion with all of you guys shortly. Over to you, Mushir.
Thank you, Sally. Really insightful. I think that's build in India is going to be a big theme going forward as well. But let's then go to an entity that is being built in India and now being exported overseas, and they've done very well. I think that we've seen a big uptick in numbers for UPI in the last 2 months as well, some record numbers despite economic slowdown. So Nalin, I'll bring you in now to talk to us more about RuPay as well as UPI, and we can take the conversation forward with others post that.
Yeah, Mushir, thank you. Just wanted to bring in a little bit of perspective from what we see on the payment side, but just to introduce to the panelists and to the audience here today, I think I am part of the RuPay product team at NPCI. I look after the scheme, so most of my insights that I would be able to share would be from a card-based transactions. But of course, happy to share some thoughts around UPI as well. Of course, as an organization, if you ask me, we've had very busy 3 months since the lockdown has happened. One that we got exempted, we got classified under essential services. Our data centers, our teams had to work 24/7. Most of us are operating from office, so I think it was a big responsibility, and we hope that we can continue with that responsibility as we move along. Broadly, just going into the topic, and I know there are a lot of thoughts around it, and then really, whatever we thought through has not really happened. When we came around March, we were looking at March and what's going to happen after the first week of the lockdown. Nothing of that has come true. Then we came around April, nothing of that came true. So there are two things: either we are bad thinkers, or there is possibly so much of uncertainty around this whole environment that you got to just take it as it goes. So let me go from a payments point of view. So from a payments point of view, we all felt that contactless payments are going to be really up the curve. People are going to embrace more e-commerce. They're going to embrace more contactless payments. Yes, more UPI, more QR. Yes, they did, but that's just part of the story, right? Because end of the day, from a consumer point of view, you are still having to go down, get to the market, do some of the important things that you have to do. You're not really completely cut off all your contact points, right? So having this one leg of payment, which sort of gets you that experience, is not really helping. I mean, it's good, but it's not really helping his entire experience. So I think the entire life has to be contactless, which is not the case, or contact free, which is not the case, right? Can I shut myself in my apartment or my house and live for 3 months? Maybe I can, if food is getting delivered and everything. But yeah, I'm just saying that we've seen some jumps. We've seen certain categories in e-commerce going beyond what they were in January, February levels. Dilip was in one of the conversations with PT Money yesterday. He also made that point that it's only the middle and the poor income group which is coming out. The high income group is still taking it, one day at a time, right? They're not moving out. They're not spending as much. The high spenders are not spending as much. Still, a lot of buying that we see is still on very basic essentials. Whether it's on e-commerce or it is, of course, new categories have opened up. People have now started buying groceries and home improvement items and things like those on e-commerce platform. But the point being that we're still about 60-70% of what the markets were way back in Jan or Feb. So has the contactless payments or contact-free payments got the market back to what they were? No, I don't think that has helped. Yeah, it gives you a sense of a little bit of more. I would say it gives you a sense of some amount of security that I'm not having to touch a POS machine, or I'm not having to touch cash or deal in cash. But it's not really fueling that. The second part to that is also the chain, right? So if you look at the vendor ecosystem and the other participants in the chain, cash has become even more important now, because nobody's got the time to go to a bank, or they don't want to risk going to a bank for their banking purposes. So they're all dealing in cash. They're happy doing in cash. They're happy exchanging in cash. All money is good, right? Even if it's dirty money or not so clean money, but it's good. So I think it's still some time to go. However, less experience for us on the credit side. But however, what we've seen, that of course somebody made that point on RBI, the regulator is trying to look at how some of these microcredit systems can be powered up. So, for example, they launched the new OD card, the overdraft or a personal loan card. It was always there, as part of the RuPay portfolio. We had a PMJDY card linked to OD, but they have now launched it in general public. So any bank can now issue a card linked to an OD account. And then, of course, all the government push around the MSME and the street vendors and other things. But we haven't really seen that take up to that extent, because the consumer connect has been so low. I mean, if you want to onboard a consumer today, there is so much of a KYC process that's causing a challenge. Now, I think that's where the whole idea of sorting the other challenges around the chain, whether it is on consumer onboarding and other areas, unless those get sorted through the recently announced video KYC guidelines or any such guidelines, solving the payment part has become easy now. I think it's a part of getting the consumer engaged, getting consumers aware of what is available for them, and getting them onboarded. How do we solve that digitally is the key question now. And I think then he takes up. Then he sort of gets comfortable with UPI and other payment. So I think that's the gap we see in the market, if you ask me, really. And we got to sort that out somehow. yeah, I think that was some bits from our side.
Thanks, Nalin. I think that's quite pertinent in terms of, step one is enabling them, but also getting them on board is quite critical. And how are we able to engage and do it will be important. As you rightly said, I think in terms of numbers, volumes, potential of the market, we probably have a big scope to go in the next 2 to 3 years. But in the current year as well, there could be some growth. I'm going to bring in Radhika here now to give us a perspective from a Paisabazaar perspective in terms of what they are seeing in the market, and in general, what are the products that Paisabazaar is seeing being the more active ones that users are looking at. I think that will also be a good perspective to get in the current times. So Radhika, over to you.
Yeah. Hi, thanks, Mushir. I'm Radhika. I run the product for Paisabazaar. Been working with Paisabazaar for the last 5 years. Seems like a lifetime, but yeah, this is for us a great opportunity. In some sense, we've moved back 3 years, whether it in terms of number of customers or the quantum of loan that we are disbursing at this point of time. But nevertheless, I think we'll all be richer in experience at the end of when things start settling down. So I had this model of saying that what does fintech mean? So what are the levers of fintech, or what are the different aspects of fintech, which I used to sort of call it as a 4P model. So it consists of processes, products, patterns, and partnerships. So I think the current crisis, there were already a lot of work which was happening across all the 4Ps as fintech revolution was taking place over the last 2 to 3 years in the country. But I think in the current scheme of things, all 4 of these aspects of the fintech will need to change, and some will change automatically, and some we need to sort of change with a lot of effort. The first thing is about processes. So like some of my other panelists had mentioned before, so I think both the supply side and the demand side, which is the banks and fintechs plus the consumers, all are ready to digitally adopt all processes. So much so my 85-year-old dad calls me and saying, how do I pay a credit card bill online? Can you teach me? So I told him that I'll pay it. You please don't worry about it. But then the thing is, the market is completely receptible from everything about their lives, which we didn't believe could happen online. Now everything is moved online. So it's the right time. All processes, everybody is ready. So for example, in our loan life cycle, you always think collection is something which you always had thought of field agents who are going to get the collections from the customers. So now I think that I used to always say that digital light will be the last to shine on that particular process. But I think current scheme of things, that's something which would get expedited much faster. And even consumers are ready. So I think that's the right place. We always had the infrastructure whether to conduct presence-less and paperless processes. We've been talking about it while there are some regulatory things which need to be ironed out. But I think now would be the right time where over the next 3 to 5 months, we are expecting things to get sorted out from regulatorily also. And also, in fact, what currently we are live with a couple of processes are 100% digital. So which is something which is as a fintech, as an aggregator who's not the final person has a loan on book. So I think it's a very heartening to see, because you were able to see on real time the entire journey of the customer. So I think processes definitely will be more digital, more paperless, presence-less, whatever less. So I think it will be great customer experience for people who are willing to take financial products. The second aspect, which is products, I think one of the things which there was some amount of lacuna which we had in our fintech growth was like very highly personalized products. So while we did have some of the fintechs, some of the panelists whom we work with came up with trying to get the market to move to some of the innovative products. But I think in terms of personalizing it for the customer's life stage, personalizing it basis his cash flow, I think that's something which will get accelerated and needs to get accelerated further. In fact, some of our colleagues from Policy Bazaar, we were just discussing, saying that, okay, now I'm not using my car, so why am I still paying for my car insurance? So can there be products which will start coming in, which would start charging only when the car starts running rather than it being standing in the garage? So things like that, where given the current context, given the current scheme of things, what can you offer the customer so that you can make the customer yours? I think that's something which we were slightly behind. Now the people who need to survive, and because of the situation, there will be a lot of innovation that will start happening in the products. Third is partnerships. So I think partnerships are the core of fintech, right? Because you were the ones who are owning the customer experience, or the fintech was the one who knew how to make customer experience much more seamless, focusing on the UX bit, focusing on the marketing of getting the customers onto the platform. Whereas the banks could be traditionally the ones who knew risk assessment, who had the processes, and who had the trust of the customer. So it was a match. It was a good match. But now they would be, I think, partnerships which would extend beyond the traditional symbiotic relationships. So there will be newer kind of relationships that will start coming in. So it could be what we were talking about through the account aggregator network, in terms of opening out the availability of data, where customers can open out their data, and it can be to an e-commerce company, it could be utility bank led, it could be GST data. Looking at each of the data, opening it out, and forging different kind of partnership which makes sense for the customer to be available to him when he or she needs it. And the fourth P, which is patterns, which would be slightly tricky because all your modeling, whether it's credit models, AI, ML, algorithms, which I think will need to undergo a lot of changes, because all of it is passed on what has been learned in the past, and the past data is definitely not indicator of what might be in the future. So a lot of things, work which needs to be done, that's something that will be like a flag to watch out for. So the patterns with respect to your credit models, your credit bureau data, even currently because of moratorium, some of it is visible, some of it is not visible. So the patterns and getting out your data, while that would be one of your biggest differentiator, that will be most tricky. So here are my opening thoughts. Back to Mushir.
Thank you, Radhika. I think that's the 4 Ps were quite comprehensive in terms of looking at the market, and it shows your product management acumen as well. So thanks for that. Shifting a little bit of gears, but not necessarily moving on to a different track. Let's get Akshay involved in terms of what early salary. I have been looking at it. How are people borrowing? Are you seeing more increases? What's the default rates and other things that's happening in the space? And what has been your overview of what you've seen in the last 3 to 6 months in the market?
Thanks, Mushir. So just giving a quick introduction. So in early salary, we are now almost a 5-year-old startup. We give instant loans and salary advances to young working professionals. Let's say pre-COVID, Jan, Feb, March, 3 months, we did almost 250,000 loan disbursements in a 3-month window. Typically, we only operate in the top 20 cities, a very metro-specific skewed towards white collar. And we have 2 models that we work closely with the employer. Also, we have an app where you can download the product as B2C. Of course, the volumes are large. Doing close to 80,000-90,000 loans a month shows that there's velocity and customer sentiment that we're managing. And on the other hand, let's look at post-COVID, during the COVID window. So let's say April, we saw demand become almost 10%. May, demand became, let's say, 14%. June, this numbers become close to 28%. So demand is only that much. The last 7 days, most demand actually improved. So we are seeing markets like Bangalore, the feeder towns in South, so Mangalore, Mysore, Vijayawada, Vizag, they seem to be coming back similar to almost 80% impact. Bombay, Pune, Chennai are a complete washout. There is absolutely no customer base coming in. So I think that's the first part. The second part is really analysis on your own customer base. See, I think all of us are pure ML-based decisioning systems. And I would say all our scorecards are defunct. So the minute COVID started, the concept of the underwriting scorecard had to be thrown out. The bureau-based primary variables were actually making no sense. And we had to rebuild the entire scoring system. So I think for almost 9 days, we could not lend, but we came back with new scorecards. I think we are now built multiple scorecards, both at customer management perspectives, the behavioral scorecard, which maintain customers, whether you keep them, retain them, give them more money, etc. And the second part was new customer onboarding scorecard, which needs a lot of alternate data coming in. So today the fintech space is changing because the need to be extremely focused on alternate data has become exceptionally large. I think pre-COVID, we were okay if we were getting some variables, but we need to have bureau bank statement as primary. Today, I would say the alternate data requirement is almost 60 to 70% in a scorecard, because the need to get real-time data of the person. Is he currently still working? Which is the location he's currently applying for? What type of payment histories does he have? Has he taken moratorium on some of the other products? So life is changing very fast, and fintechs have the unique ability that they can move their models faster and innovate. The second part is, I think, unlike traditional companies, while work from home took a lot of time for them to adjust and adapt, and they're still struggling at it, I think our tech-enabled approach made us faster, and we were ready much earlier. So between the 9 days when scorecards were getting ready, I think every single operations process was up and running, and we could run the entire company remotely. Even today, there is no need to really run the office anymore. We do have, let's say, 8 or 10 people who turn up every day because they have some laptop difficulty, connectivity difficulty. They're coming temporarily to solve some of them. But every single line function, whether it's collections, whether it's infrastructure, whether it's ML, if it's tech, is able to work remotely and build in operations. Right? Now, the fourth component is, I think what we saw, that everyone is a fintech. Right? The traditional company will also have to innovate similarly to you, and we are seeing acceptance of our model. So I think the first step was RBI accepting digital platforms and coming out with guidelines that this is what you need to do. Right? We've been asking for these for years, and during COVID they came back with a very clear guidelines that this is how the minimum addressal has to be done. You have to follow these practices, etc. Got published, which means that there's a clear acceptance coming in of the digital lending platforms is in a large play. The second part, I think, is the impact of moratorium. This will be the larger impact where cash flows across the board will be affected, and specifically companies who are underfunded will find it extremely difficult to struggle to build up a company again. Right? So in the next, I think what we're seeing is companies up to Series A funded are really struggling. And we are seeing already many of them calling it off and saying, listen, acquire us or get go merge somewhere. We cannot sustain the business. So companies who are better funded will sail through. And it will be a time where you'll see lots of either merging or acquiring or M&As actually happening like that. I think the last point, which is really important, is there is a huge amount of sentiment change, and people have gone back to many towns. So we saw reverse migration. In fact, most people felt that the migration was actually blue collar, grey collar, and we felt that it is the bottom of the pyramid going back to their hometowns and their villages to work. But if I look at my own company, we're a very white collar specific. Almost 55% of our customer base works in IT company, right? We almost saw 28% of our customers moving to smaller towns. They've gone back to their parents' homes or their hometowns to work in. Right now, this reverse migration causes a huge amount of issue because you still have to collect your money if you're not giving it today. Right? He may continue to work in Bangalore, but Warangal becomes the next large area where they work. Similarly, for Bangalore, Hubli becomes a large one. So we need to have collection infrastructure built in. From a 20-city operations, we need capability to run in 228 cities. Right? And that shock comes in less than 20 days of the COVID starting. And we're not seeing that the large transformation take place. So we thought when lockdown will start, people will come back. Well, both things happened. We saw 6% of people who were already in large metros still moving to smaller towns, while people who moved earlier, close to 8% of them coming back. So only 2% overlay changed. So we're not seeing a hurry that people want to come back to jobs, even in white collar, which means that that all of us have to redo our complete thinking of how to cater to the next consumer segment. And I think that is going to be a fairly interesting project coming in.
Actually, I think that's a topic on the migrants we can bring up again as we speak about. And you rightly, it's a very interesting point you bring on the grey collar versus the white collar as it may have been. That's something that was noticed in China when COVID hit the first time, because a lot of, you're talking about again crores of people were away from the big cities in their hometowns, and one of the things that most companies were dealing with was to be able to send their laptops and other work material over to them. Right, internet connectivity was not that much of an issue in all places, but how do you get them to be, working offshore? I think one of the things that all of us have gotten used to a certain extent is working from home and running teams and figuring out these digital engagements, which will probably continue for the next 6 months to a year, right? But another interesting aspect of this whole story has been about inclusion, and in particular, we're talking about how has this impacted the female economy and the women's market, right? We have with us today Neha, who focuses a lot on the women's market and the impact. And I think financial inclusion in India, we've also seen that women entrepreneurs as well as women as such are a target market that is continuing to grow and has a lot of potential there. So Neha, I would love to hear your views on what's been happening in the space in the last few months. I also know you are looking at the sustainable finance element of it. So good to hear some inputs on that before we jump into the overall panel discussion. Neha, over to you.
Hi, Mushi. Hi, Mushi, can you hear me?
You're bleak, so probably need to get closer to the mic.
Oh, okay. Better now?
Still a bit bleak. I don't know if everybody else are able to hear it.
Volume is very low for me.
Hi there, can you hear me?
You're still quite low.
Okay. Can you see me?
Actually, no, we can't see you, and we can
No,
barely
Neha,
hear
yeah,
you.
we can't see you.
Neha, do you want to just try very quickly to log out and log back in?
Sure, I will do that.
While we wait for Neha, I think we can just build a little bit more on that conversation. And as Neha comes back on, maybe we'll just make a brief introduction or the topic of sustainable finance. I think that's another piece that we will talk more later on in the panel, but that's another thing that we need to focus on. Though COVID-19 plastic, as they were seeing, right, has proven to be a great use, you're going to start seeing issues with climate-related issues post this. Water is another issue that we are talking about, but sustainable finance is not only about looking at how we can sustain the environmental future of the world and our country, which is one of the ecological hotspots in terms of sensitivity to changes in climate. But we also need to find sustainable finance in a way that financial inclusion can be driven across the base. We still have what's the number, close to 300-400 million people, so 30 to 40 crore people who are close to the poverty line or below that, as per the UN defined numbers. And as per the WHO as well as UN, due to COVID, millions more, or in our Indian terms, crores more people are going to go back into poverty, right? There is definitely going to be a bit of wealth erosion that's going to take place, as well as people moving into poverty. And that for us has to be another piece that we build towards while we use FinTech, right? If you take the early cases of FinTech that a lot of people do refer to is M-Pesa. And you can see shades of that in Bheem and the Jio handset in some senses, where M-Pesa came about as a way to enable people to effectively do remittances locally in Kenya through feature phones, right? The old Nokias and early Samsungs of the world, and they did it in a very cheap way. And now about 80% of all payment volume in Kenya is run through M-Pesa, which was a private organization building this out through Vodafone, right? And they have tried enabling that in India. It hasn't really worked, but that's an example of how FinTech can be very useful for financial inclusion. We are the world's largest market in terms of receiving remittances. I think it's upward of $80 billion that flows into India every year. And that's one of the markets that has probably the largest fees. If you're looking at the physical transactions, where people pay 5 to 10% in some cases for transfers, and that's a significant chunk of their salaries, right? And that's one of the pieces I think we need to look to see how we can solve, especially keeping FEMA rules and others. There is where our regulators will come in. I think they have been moving positively. The recent rules, as Akshay was talking about, with the RBI recognizing digital platforms and also providing more relief for NBFCs in the COVID-19 crisis is an example. eKYC finally, despite all the capabilities being there for the regulatory aspect to be enabled, is a big achievement, I would say. And then the RBI eventually launching the sandbox for innovative solutions. As we build on that, I think we should keep a keen eye on how can we be more enabling more financial inclusion, especially for the bottom 30% of the country. How can we bring them up, and then we can pull up the rest of the value chain, right? Neha, we have you back. Would you like to unmute and see if your volume is better?
Yeah. Is it better now?
It's a bit better. Maybe if you're in a secluded place, I may request you to speak loudly. You won't be disturbing the others, but it will help here for the audience. Neha, you're back on mute.
Yes. Can you see me and can you hear me?
We can hear you. We can't see you though.
Okay. Okay, I think this will do. I don't want to waste everyone's time. So this is the flip side of being the last panelist, that all the points have been taken by my fellow panelists. So I'll keep our story really short. And since we're talking about COVID-19, I think what we can actually think of is that it's a crisis, right? And when we talk about crisis in the Chinese language, we can think of two characters that define it, which is danger and opportunity. And to my mind, I think this is a great time to look at the positive side and how we can make the most of it, because it's a huge potential to bring up the what you said, Mushi, just now, the last mile, the underserved, the unbanked. And we at FemTech Partners, this is what we are striving to do. Hi everyone, my name is Neha Mehta. I'm the founder of FemTech Partners. We are focusing on sustainable finance for financial inclusion of women and aiming at poverty alleviation in Southeast Asia. So I think what we have realized with COVID-19 is the fact that we are very digitally connected, the economies, the countries, and the society. So it makes total sense to be connected in a good way. So what we are focusing here right now is the fact that there is a digital divide between men and women, and it's important that we speak about it and we address this issue, because a lot of times what happens is that as a woman, you're not only looking after your full-time job, staying at home, looking after the kids, especially since we are working from home, it's getting equally challenging to manage home and work at the same time. So there has been conversation that's going around now that either you can have a job or you can have a kid. You cannot have both in this current COVID-19 scenario. So I think for us, it's important that we focus on these aspects of including women. And we also have been looking at remittances, because you spoke about the migrant workers. And if you talk about countries like Singapore, Hong Kong, they have tons of these migrant workers from countries like India and Bangladesh. And they're not able to send back money home. The remittance channels have been disrupted. And most of the countries have not labeled remittances as an essential service. So what's happening is that we don't see the money going back to the family, and with the current scenario, there's not enough money in the house. And I think we are in a position where we don't really know what's going to happen when will these channels be up and running. So as we are talking about digital payments, talking about uptake in terms of telemedicine and educational learning, which has gone I think it's important that we also focus on bridging the gap between men and women who are trying to focus on going digital and giving them the right skill set and the tools to be able to tide this wave of COVID-19. Thank you, Mushi.
Now we'll jump into the panel. I will give questions to the panelists, but others, whenever you have a view, please feel free to dive in. We'll do about 20 minutes conversation, and then we can jump into some questions that the audience have been asking. And once we answer those, we could come back for final thoughts. Right? Now, I'm going to put this out to Nalin first. Is a question around government regulations and policies that you see upcoming to enable a digital future, right? So maybe a little bit more on what are the policies that you are looking forward to, and what are the things that from a NPCI perspective that you would be expecting to come forward? I'm not seeing as you as a spokesperson for NPCI, but more so as somebody who's closer to the policymakers, can give us a little more insights on that.
No, surely, actually, if you ask me, a lot of policy impetus on payments happened during demonetization. Whether it was to bring in UPI in the country, or was it to look at launching of BBPS? So a lot of policy impetus came during that time. I think more than what what that has already been done. I think it's only about looking at the infrastructural challenges that continue to remain. Somebody was mentioning about being able to do everything from home. We still live in a country, where a large portion does not have the network bandwidth to do something that they would like to do. Which is why our USSD-based payment, which is *99#, that's the UPI equivalent on USSD, is still very relevant. We are still looking at solutions around it. The interface is very messy, but again, that's the option we have today. So I think the policy, the way they're looking at it is that how can we still ensure that payments happen without having dependency on these infrastructure gaps. So let's say if I was to pay somebody, can I do this without having to do an online transaction? Can I do this because I trust the other party? There is a certain e-exchange and I can do that job without having to go online. So I think that's the what we typically call it truly offline payments. Okay, I think that's what they are looking at. We believe they are going to come in very soon with some of those policy guidelines where they look at making these payments more relevant from a infrastructure. Sort of make payments infrastructure independent. Number one. Number two, I think the second policy framework that we've all seen this very recently. They've announced the launch of a payments development fund or an acceptance development fund, which could go up to about 500 crores, depending on how the participation goes. They've already committed some amount, and again that goes to tier 3, tier 4, tier 5 towns, where you have a card, you possibly even have a smartphone, but you have no ways to use that except for cash out. In fact, one important information that I wanted to share with the group here is that despite all the all the noise around contactless payments and everything, the payment system that caught the maximum traffic in the last 3 months was our Aadhaar-based enabled payment system, which is primarily cash out. And that was, of course, the amount of disbursement that has gone to rural towns, rural sections. So I think therefore, coming back, the policy framework could be to enable a more merchant-based acceptance infrastructure in these areas, which are asset light. So these could be either QR based or it could be mobile POS based. So you and I can convert my mobile phone into an acceptance device. So how to make that happen, right? And number three, from a policy point of view, I think they have now started to look at organizing and identifying the payment players. There are so many payment players. If you look at the chain today, there's a merchant, then there's an aggregator, there's a PG, there is a acquiring bank, there's a scheme. There's so many payment players, and to sort of to formalize that segment a little bit more. So they come up with the payment aggregator guidelines very recently, right? So I think that's the third policy change that they bring in, that they are going to formalize and structure, bring more structure to the payment players, in the market. And I think I think that's primarily, so from a pricing point of view, a lot of work has already happened. In fact, on most of our NPCI product, there is hardly any cost to the merchant. We're operating at zero cost. So I think that's the primary policy input. What I do see, in our engagements with them and in our engagements with some of the players in the market, there is now a growing, I would say, focus on microcredit. They've recently announced, I would say, a consultant paper on sale of loan exposure. So I think September, post September is going to be very exciting. I don't know whether we call it exciting, but it's going to be time to watch, because that's when the moratorium gets lifted, and it remains to be seen how market pans out. So I think they're more readying themselves for that, to make sure that the credit market continues to sort of sustain and go forward in a fashion that is envisaged. So they're looking at sale of these, so that committee has been set up. It's going to be exciting to see how that pans out. So that's like a derivative market for loan exposure. So that could be nice.
Yeah, I think that the the bad loans or other issues, we don't want to see that crop up again from a banking sector to extend to NBFCs now, right? Despite all the support with the bail. I'm going to jump to Sayali now. In particular, Nalin was talking about how payments is almost low cost or zero cost almost, and there's a whole discussion on MDR rates and what are the payment players getting. There are a couple of questions around how successfully have the payment players done, right? So the margins per se are minimal and are shrinking. Payment merchants aren't willing to pay. The banks aren't willing to give too much. And so how are the payment players looking at it? And what do you think will be the key for continuing this? We have the unified, you have the Bharat QR code maybe, but how do we have sustainable payment companies that can drive this costless transactions for the retail economy as we continue to build and add more people to it? Retail digital economy, let me add that. Sally, over to you.
Yeah, thanks, Mushir. So I think, the payments margins have been getting squeezed for a while, so it's not news to them. They have seen it coming for a while, and they have been, I think the industry has been trying to innovate. Like, one is that they've been working on interoperability, right? So while Paytm was growing and people thought they've taken over the market, who else can even do anything? Google Pay still grew and Phone Pay still grew, and then came Bharat Pay, and people are like, abhi to chance hi nahi hai, but Bharat Pay also came and solved for a different use case. And so I think what people are doing is that, like, payment is step one, but payment solves for a lot of other use cases that can be built on top of it. For example, when you are helping Kirana guys take digital payments from any app, like the Kirana store should not look like a tiled QR code panel, but it's actually just one QR code, and he can accept any payment app to use UPI and pay him. And then the company can offer them various services, right? So based on that data, finally you have data to really understand the Kirana store's numbers properly and then be able to lend to them. Otherwise, previously, if you look at their bank statement, you wouldn't see a lot. But now, because one, digital adoption is growing, and second is that there are these interoperable, more abstracted out QR codes, you can see the whole data stream, and you can able to give value added services like working capital loans and term loans and so on and so forth. So I think some of these are innovations that payment companies will build and are building to kind of give their customers and merchants a lot more services. Another really good one is buy now, pay later, right? So many merchants have buy now, pay later options to finish checkout in one click, but also to give you that 15 days, 30 days of comfort to take the product, understand the product, and not worry about return and refund from the 3-day to 8-day refund cycle, but actually just have it done from your buy now, pay later account. So it's convenience, but it's also credit, and it's also protection from both refund or all of that. So it actually grows commerce, right? Because some of these things enable you to trust or try it out, at least. If you're not trust yet, at least to try it out and then not worry about not getting a refund or something, just go for it. So I think over and above the payment infra, a lot of other features are being built that serve the customer more. Neobanks are being built, marketplaces are being built, and so many of these features are applied not just to the urban millennial customer, but actually to MSMEs and all of that. The other payment innovations are coming in supply chain. So while P2P and P2 merchant, like at one point of sale point, has seen a lot of growth, overall in the supply chain, as digital payments grow and the invoices kind of get understood well, the entire supply chain can then be financed properly. The invoice discounting can work properly, factoring can work properly. And all that is very, very interesting. And it is all coming because the payment infra is so strong and the payment adoption is strong. So I think these are the things that as they get built as layers on top of the payment systems, payment companies themselves will see monetization from these features.
That's going to be a critical thing, right? I think it'll also potentially, because you have such large players coming in from Google, Amazon, etc., Flipkart also potentially getting NGO through WhatsApp Pay, it's unlikely that they're going to consolidate among each other, right? So that puts into picture that they have to look at other options or models or use the payments rail as just a commodity customer acquisition in the way that Alipay and WeChat Pay have been doing, where they don't charge anything for the end customers, and then that's their way of acquiring customers, right? And that probably is going to be what it is, right? Now coming, so I'm going to just borrow from that and bring in Akshay and Radhika on this. Whoever wants to go first on this is firstly, when we are talking about more data coming in, but we're also talking about potential defaults post September, etc., right? How there's a dichotomy in that, right? One is that there's that potential high risk of credit defaults based on currently very prime customers, while on the other side you are looking to enable more people and give more lending because that's where also there is a value to it, right? So how are credit models changing? How's the risk being handled when you're giving out these loans? And I also want to check more about how are the underwriting models overall changing beyond the current scenario? So both of you are in the lending space, quite looking at that quite closely. And how do you see this impact? So maybe we start with Radhika and then move to Akshay on that.
So what we are seeing when we speak to partners, we don't underwrite So we work with partners who are underwriting. We facilitate the loans. So when we speak to our partners, 2 or 3 broad things are emerging. Initially, it was all shut because nobody knew what was happening, and we had to figure out moratorium and all the regulatory compliances. Then over the last 45 days, 30 to 45 days, what we are seeing with respect to lenders also want to start lending, but they're starting at like almost going back to the very, very high level. They're happy to do pre-approved programs for their existing to bank customers, but the pre-approved guidelines are much tighter than what we've seen in February. So I would say we are still operating at 20% of the pre-approved cuts. So the cuts are very, very steep at this point of time because people also want to start figuring out how to do it. So my sense is in the absence of the credit data being freely available, because we also know that because of moratorium, there is confusion of the banks not reporting to the bureau because it's okay to not report at this point of time. So the data asymmetry would be there in the next 4 or 5 months. Until then, the customers, especially the large banks, would be happy to work with their existing customers, whether it is their existing loan customers or existing even savings account customers, to figure out what their propensity to repay back is there. I think at one level, like somebody was saying, that these are the underserved market. The underserved market definition itself will undergo a change, because if you have people who have lost jobs, or people, even MSMEs, where the business models have changed. So I think the earlier underbanked and all of that definition will start changing. The next 3 months will be critical to rewrite for people to rewrite their models. So while data would come in, they have to test that out, right? Because without testing, how would you know? So there would be a next 5-6, what I foresee is next 3 to 6 months of a lot of active experimentation and amount of risk taking which would happen, so that we would start to expect to go to 60-70% of the pre levels by the end of the year, is the sense that I have.
Thoughts?
So actually very different perspective. See, today if I look at the large consumer facing NBFCs, Bajaj, HBD, HDFC, and banks, etc., they've had between 45 to 65% people who have opted for moratorium in the first quarter, which means come November, there's going to be a large number of consumers who have built up large amounts of outstandings and now they need payment. The big question is it's going to be very difficult for credit teams to actually to bring their bars down faster to cater this consumer base, which means there's an opportunity for the next player in the market to go and acquire these people and still give a lending product to cater that huge outstanding which has got built up across this base. Let's look at a credit card base. India has close to 2.7 crore credit card active users, right? I think more some parts which show up almost 60% people have not really paid credit card bills last 3 months. They've actually built up their outstanding and said, I'm opting for moratorium, which means between now and November, an average customer, instead of having 45,000 outstanding credit card, will be sitting on 90,000 rupees credit card outstanding with an average salary of 45,000, which means he can't pay it in 3 months. He needs a 1-year loan to pay that loan outstanding off. Now, here's a huge opportunity, but how do you underwrite that customer? And that's where the use of bureau will be quite complicated. You need to have new systems to underwrite, new ways of doing new to bank, new to credit customers, or even thin files. People only have credit instruments running around. So that's like a large space of opportunity which is going to come in. And I think that's where I think players like fintechs have to step in to really innovate on their scorecards, their process, their customer interaction capability, getting that data, whether he's good to be given money in such a case. Typically, when you look at a consumer who opted for moratorium, your first reaction is, listen, he looks like undergoing too much stress. On the other hand, if you look at, he's able to manage his cash flows today, unlike the consumer who didn't opt for it and was running down his cash flows, which means that if he undergoes a job loss, his chance of survival falls much below. So how do you risk rank people in that manner, and managing the right data flow to really structure that opportunity is going to be the critical component. Yeah, of course, I think Radhika said it quite. Everyone has raised the bar. For example, I think our approval rate has gone from 37% to as low as 15% today. So it's quite low, right? And I think across the board, no one is spending money to acquire customers. Certainly demand disappears when people stop marketing dollars. Now it will come back. We're seeing some amounts of comeback started. Latent demand has started to show up. But the question really is, how do you underwrite better? How do you make sure your scorecards are up running and you can really manage the consumer experience still in a better manner? Because you can't have physicality. You have to now do even less physical work because you can't actually get that physical data anymore. So that I think that's going to be interesting models coming.
So it's going to be interesting, I guess, also to see, in a sense, when you're saying acquiring, that reminds me of how people would chase when you have a home loan and the other bank is coming to acquire and say, rates have fallen, why don't you switch your loan to us because there's a longer payment. And in this case, the likes of the credit cards, which are typically are going to be one-time payments, they may offer a 3 month, 6 month installment, and they may have to revise that installment schemes and say, okay, we'll extend that to 12 months just to retain the customer while through their banking units. While on the other hand, others may come in because they now have a better credit rating, because they have an understanding of what this person is he still employed or not, whether they still have their income proof, what are their outstanding loans, so they have a better picture of underwriting those models, right? So that could probably provide a better side for the NBFCs and the lenders. But on the borrower side, Neha, what is going to happen with this is, if you're having numbers of 20 to 50%, right? I think we all agree across the board the numbers are less than 50% of what people were giving in terms of the thresholds that were there prior to COVID, right? Which means there's a whole section of people who have run out of their savings by now, right? Typically, you would expect most people to have between 2 to 6 months of saving, but I would say most have run out of it. And there's a huge chunk of people who have, we spoke about the migrants who have gone back to their cities, as well as those who don't have those jobs anymore, who now have run out of their savings, have borrowed from their family, from their neighbors, from the loan sharks, who are now going to be potentially in trouble. So how do we solve this issue, and how can we help these people come back into, I'm not going to use the term financial inclusion, but I'm going to talk about digital inclusion and fintech inclusion per se. Yeah,
so I think what we're looking at here is the fact that the economy has gone upside down, and see all these people who have been uprooted from friends. So what exactly we need to do is the fact that when we talk about financial inclusion, we talk about few pillars that bring it together. It's about having the network effect, having the regulatory effect, platform effect, and the ecosystem and innovation effect, right? So to bring all these criteria together and pull them together to make sure that we are able to reach the last mile and to make sure that no one is left behind in the digital era. That is the future that we're looking at. So to achieve that, I mean, if we talk about India, we have been able to digitize the G2P payments, the government to person payments, because we have the JAM Trinity there. We have Jantan accounts, we have Aadhaar, the India Stack, which is a very powerful tool. And then we also have the mobile infrastructure. Someone was just talking about how we're doing the eKYC. The other day I saw this by the 811 bank. You can actually do the eKYC and open a bank account in less than 10 minutes. This is great for the millennials, but can my mom open this account? Can we provide this facility to the rural poor? No, it's not possible. So what we really want is that we want the infrastructure to be strong, and at the same time, we want the right skill sets. So I think this is the time that we need fintechs who are agile, who are adaptable to this new course of life. They should be able to come up with solutions so that we can upscale these women who are small entrepreneurs. They have been doing the business in a pop-up store, but now they're not able to sell things because transport connections have gone bad, right? The supply chain is affected. So it's important that, let's say if there is something like Grab in Singapore, we have a similar of that sort in India, Ola. If Ola can work with these mom and pop stores and provide them the supplies and connect them to the end consumer, we can actually make sure that the value chain system keeps going. And at the same time, we need to provide these working loans to women who don't really have a credit scoring. They don't have anything to give as collateral, but it's just about the trust and the creditworthiness that we know. It could be basis on their digital history. It could be basis the fact that they are working in a system which could be talking about cooperative society, peer-to-peer lending models. So I think we need to think in a very innovative fashion to bring around alternative investments, such as peer-to-peer lending, and look at solutions which have not been done so far, because what we're talking about is not just a short-term problem. We are looking at a problem which could be affecting so many women and youth. Because if you talk about the UN stats, they said that around 1.2 billion youth and women are impacted by COVID-19. Because now we're talking about a high rise in youth unemployment, and at the same time, there is this urge to actually work, and there are no job offers in the market. So I think it's about time that we look within, work on our skill set, and try to work on having the right skill set and be self-employed. Because what one of the fellow panelists just said, that it's about Atmanirbhar era. So it is important that we actually continue focusing on developing ourselves.
Great. Thank you, Neha, on that, giving us color on that part of it. I hope you're still with us, because I'm going to move to audience questions now. We have about 15-20 minutes for that. And one of the questions that came up about was, is the rural India keen on digital payments, right? How keen are people who haven't used it yet actually wanting to do it? Nalin brought about the point about demonetization, and how during demonetization we had this big spurt in the payments, and India Stack was just ready around that time, or sometime before that, so that provided it fill up. But are the unbanked and financially unserved in India really interested in using digital payments? What would be your sense of that?
So I have done some field work in Bangladesh. Unfortunately, I don't really have a big exposure to the Indian market, so I can just rely on my experience in what has happened in Bangladesh. So while I was there in the remote areas of Bangladesh, I actually engaged with people there. What I realized is that some of them are very open to the idea of actually using
I think Neha just dropped off. All right, maybe we'll move to the next question, and once Neha comes back, we can have her speak on this. I mean, this is an open question. Anyone, I'm happy to hear from Radhika, Sayali, or Akshay on this. This is about what do young fintechs do, right? In this current scenario, you started a year or so or less than that ago, and you've been hit with this. A lot of fintechs and other startups have had to furlough. You don't have people. I know of instances where fintech startup founders are looking for jobs so that they can pay their staff, right? More than anything else. That is very dedicated and very great to see, but that's not really good for the ecosystem. So if you're a young fintech founder, you've stumbled upon this. Adversity does have a way of helping you grow, but in the midst of that adversity, how do you survive? Maybe that's the question. So some of you have been through established times, but also seen the tough times during demonetization in some senses. What would you say? So anyone who wants to take the go? Yeah.
Maybe I'll take that question first. I think today fintech, I think across the board, cardinal rules of businesses remain the same, right? A financial business. I think today you need to move from an AUM business to a P&L business. It's not really about building a large balance sheet, building customer base, spending to create customers. It's really about making sure that every dollar that you spend gets recovered and you make money, a little bit money on top of it to run your company. Now, I think that's a difference in mindset. We are not used to such a mindset as a change, right? Entrepreneurs, we are tuned to grow a company, make it large enough and fatten it up as much possible before we come and say, now we'll make it into a P&L business, right? But I think the curve has changed. We saw, as in fintechs, which are India specific, we went through 2 NBFC crises, 2 banking crises, and now getting into COVID. So we're a little hardened, right? We're not like first time experiencing a troubled time. So we know that cost of borrowing is going to be tough, liquidity is going to be extremely difficult, customer demand will keep fluctuating, risk has to be adjusted for. But most importantly, you need to run it like a P&L business, right? Only then you actually can build this business up. The second part is learn to survive. It's not really important that if you have to let go of half your people or even one person, it hurts. I think we're a little fortunate. We raised some more money on Christmas, so I don't have to take any drastic step, right? But if I was in a state where I had only raised 1 round or 2 rounds of money, I would have come and said, listen, I'll conserve every rupee. If I just survive this, I believe in the startup economy, 70% startups will disappear. It's not about fintech or tech only. Every type of startup, 70% will disappear by November. You need to make sure you sustain enough, because most startups only keep 120 days cash flows with them, right? So March till December, all is over. So just if you can survive that, even if you're left with 1/5 the customer base, 1/5 the employee base, don't worry, you're better off than most of them, and you can all rebuild it again. So just follow these 2 rules, and I think you can still sustain.
To add on that?
So go ahead, Radhika.
Oh, sorry. Hi. So I think I agree with Akshay. Basically, it's not only fintech startup. I think any startup would be in the same situation at this point of time. And we've also, and even at our households, we have seen the same thing, right? When in doubt, might as well conserve cash, because you never know each of us what will be our personal cash flows. So I think the same thing applies to all companies in the future. So all of us would be focused on conserving cash at this point of time. While I'm not a founder, I'm an employee, so it's slightly different. So I would leave it to the founders and not talk much about it. But one thing which we are trying to do is to sort of say what we didn't do when we were running our lives, when things were in full pace. So at least some of those things we are trying to sharpen the saw now, but in terms of putting in completely digitized processes, because we know that's going to be the one which would turn the curve, getting our analytics capability or data ability to have a 360-degree view of the customer's capability. Some of those things which would have been good to do at that time, or because of prioritization couldn't have happened. I think that's what we are trying to focus and get that done with the resources that we have at this point of time.
Final word on this before we move on?
I think along with these great points, there's one thing that I would like to add is that while we all work very, very hard to survive, and I'm with Akshay there that we've battled hardened through a few of these crises, almost hitting once a quarter. I think one of the things is that it is all right to take a call saying that right now it's going to be difficult to survive. And if you can't, it's better to call it early than to drag the whole team and yourself through it. There are many larger companies where you could continue to build your vision, maybe under a larger umbrella. So getting acquired, for example, or acqui-hired, for example, or finding a job within a larger company that lets you build your vision. It's not a terrible idea because it's the need of the times, and you can, just like you expect your company to come back and rebuild, you can expect yourself to come back and rebuild at some point. So I feel that there is going to be a lot of harsh decisions to make, but if you can see the harsh decision, then better make it fast, is something that I really stand by.
I think adopting and adapting is very important, right? I just moved from my Starbucks coffee to outside because they closed for 6:30. But as somebody who started a firm 9 months ago and having seen a lot of changes and impact here locally in Hong Kong, from political impact to COVID and other issues, one thing that I have learned is to maximize whatever resources you can use. You don't need an office. You can sit in a Starbucks or a coffee shop, or go sit in your parents' place if you need to. Your staff, if they can work from home, saves them time, saves you running costs, run it, right? So be as frugal as you can. As Radhika mentioned, treat it like your house and how you would treat it when having the tough times. Moving on, Nalin, bringing you in here, from a UPI and RuPay perspective as well, what would you say are things you're looking forward to in the post-COVID era, right? Post-September, we've spoken about how we're looking at the moratorium being lifted, potential jump in numbers, etc. But what are the key elements that you're looking? How will you think the payments landscape in India will fundamentally change over 2021?
Yeah, so let me answer that very factually. There are going to be two areas that I think we are going to focus, and I will see the market that is also going to focus on. Number one, the consumer perspective. Consumer perspective, I think a lot has already been done. A lot of you guys have done a wonderful job in sort of ensuring that he has propensity to pay, whether through credit or through any other platform. And that needs to get evolved. So, Radhika spoke about making the models better, and you guys are looking at more areas of making it 360-degree view. So I think that's in play. The only part of consumer side which I think we are going to enable on the payment side today, payments are very dead payments. For example, it's A and B, right? I make a payment and that's it. There is no functionality to that payment. And when I say functionality, for example, what if I want my payment to be recurring, and it's happening every month without me wondering about an OTP and a second factor, things like this. What if I was to do a eligibility check? What if I want to do an eligibility check on a consumer as I'm making a payment, right? Not something before, not something after, but as I'm making a payment, and I don't need to do a very bilateral arrangement with a credit provider. What if I can do it through a network or through a payment system altogether? So that's the number two part, right? So to be able to give more functionality to your payment is what we're looking at, and it can bring a whole lot of things there. Single factor authentication, trying to do payments without getting worried about security, but making the experience better. Contactless is obviously one good example of it. Recurring, EMI eligibility checks and things like those. So I think that's the consumer side of the story. All of us, at NPCI, whether on RuPay, UPI, you will see a lot of noise and news around that as we move forward. On the other side, which is the M side, the merchant side, or whatever, the receiver side, I think it's a very base model today. I think there is a greater need. I heard some of you making a point that this is kind of a plateau period in terms of the COVID, and there there could be challenges. You could relook at you are looking at rehashing your plans. I think that's an opportunity area, if you ask me, where possibly very little has been done on the merchant side. So if all the focus of the last 5 years, 6 years that we've seen has been more on the consumer side. Very less has been on the merchant side. Bharat Pay is one clear example of it. So I think there's opportunity to create a platform, like you created platform for consumers. There's an opportunity to create platform for merchants. There are merchants today who want to do online delivery, online shopping delivery, but they don't have models to do that. They have only two choices. They go to Amazon, they go to Reliance, and they sign up with them. But they don't want to do that. How can we help them? How can we make it more democratized in a fashion for the merchant? So coming back, creating that platform for the merchant where he can onboard to a payment ecosystem. You can also provide him credit on that, so that it's revenue-based credit somebody was talking about. How can you provide credit on that basis? How can you help him service his consumer? So somebody, I was speaking to yesterday, was talking about click and collect. He does not have a Swiggy kind of environment to deliver. He does not have the environment he doesn't want to sign up with a large, an online aggregator. But he knows his consumer. His consumer knows him. They want to talk, make sure that he's got his order packed and ready to be picked up. That's all. So he comes. He's made his payment already, or he can make it at the time of picking up. But he will work hard to make sure that his baksa is ready, right? So how do you? So the click and the pay and the collect model. I don't think that has been explored enough. In the everybody's looking at delivery all the time, but I think that also is an option that. Medium-term merchants or small scale merchants would like to certainly be a party to. So I think opportunity to create this merchant platform that can bring Bharat on board, and we can move away from India for some time.
So much, Nalin. I think there's a lot of opportunity. My final thing is we have a couple of minutes left, so I will give each of you 20 seconds. I'm going to put you on a spot. Which company or fintech vertical you think is going to be the leader for Atmanirbhar Bharat, right, going forward for the next year, right? Other than your own firm, which firms do you think can be a good leader in the segment, or a segment that you think is going to be the most important for enabling Atmanirbhar Bharat? 20 seconds each. Let's start with Radhika.
Payments. Sorry, it was a tough question, but I'm just going with payments because we are already there and we can take it up.
Do you want to take a sector in payments?
No, I would say the infrastructure, all of it together. So no sector.
Okay, great. Akshay?
No, I think lending would emerge as always a stronger model because lending causes the largest income generation capability, and you need income to really build a financial model, right? And I think so. If you look at globally, also until lending started making money in the transactional digital payment system, it didn't fire. So I would still bet a lot on lending to say the future lies. How do we build a better lending model? How do we do across from consumer to B2B to SME to interpay, intertransfer? How do we make sure lending plugs in so a clear monetization gets achieved and no one gets trained on the model? So I'll still bet on lending.
Nalin? I know you had a lot on the future side, but yeah, and payments may be the pet peeve, but what would you pick?
Yeah, no, I think we've taken the challenge head on. We're now exporting this technology. We're exporting UPI. It's coming to Singapore very soon with Nets. We're exporting RuPay. We're exporting ability to do offline payments. Nobody in the world has done that by now, but we made it happen in India. But I think where we seriously like, guys, is our ability to, I don't know, maybe it's not for this forum, but if you ask me, we still lack on the infra side. Today, the reason why we are pushing a use case of converting your mobile phone into a POS device, because there aren't any POS manufacturers in the country. There aren't any card manufacturers in the country. We still import a whole lot of that. I don't know. I mean, that's an area for Atmanirbharta, if you ask me.
I think that's also an interesting point, right? It's probably, are we preparing for the next leapfrog moment, right? Cards are going away from being physical to becoming digital. I mean, it's all on the devices now. So physical cards are disappearing in the rest of the world. Are we building infrastructure for what is the current, or should we be building infrastructure for the future? And from there, the mobile POS as such, if you're going to use that term, is probably the way, QR code to QR code, right? And making the NBA, using NFCs
at a point
to drive things. Yeah.
I liked everyone bringing in a perspective that Atmanirbhar and Modi's initiative to bring things done in India.
Yeah.
I think it's also a high time of building internal more comfort to disruptive companies, right? How do you really get Indian startups to really compete with global startups and cash flows coming in from outside India? I think that if that's another point which will really benefit the economy locally. I think where manufacturing, we're already seeing that impact. How do they bring in financial services would be a very interesting uptake.
Very true. It has to be.
Can I take that?
Yeah.
So I'll tell you guys, sir. There was a recent article that I was going through, and I realized that this is so much true in our. I'm part of that generation where engineering was a basic education, and almost 90% of all engineers that I know went into software engineering. We are not going to have people value investments in our manufacturing or any other sector till we open up our thoughts to. I think the only industry that got saved from the onslaught of the imports was our automobile sector to some extent, especially the two-wheeler sector, where we were able to protect and export. So if we are going to get ourselves to be more self-reliant, we've got to change our perspectives. I don't think everybody needs to go into software engineering. I think it's important that we bring our talent back into areas where it matters, be it civil, be it mechanical, whatever those areas are, architectural, and we will see investments coming in then. The reason why we don't have investments coming in because we don't have people working on them. So
yeah.
As an industrial engineer who became a trader and now in FinTech, I can tell you I completely agree with that point. I think apprenticeship and internships in specific fields will be there. Sayali, last word to you before we close. And thank you for somebody who corrected my Hindi and said it is Atmanirbhar and not Atmanirbhar. My apologies on that.
No worries, Mushir. I think maybe you should come back to India too and build here with us. But guys, I think one last point that I would like to add after really good ideas here is that I really am excited about the supply chains getting onto digital payments, and that flow-based lending is, I think, the next frontier to crack from both a data science perspective and also from bringing interesting products that are very suitable for them. And I think there we have to build for India and for these Indian merchants and for the Bharat merchants. Really, we don't really need to worry about what people are building in the US or China or wherever. We just need to build for people here. Once we start seeing that supply chain data, once we start seeing the flows, I think it will be very exciting to build for those and build those flow-based financial products. Not just lending, but all flow-based financial products will be very, very interesting, with lending maybe leading the monetization as always. But I think it will be very interesting.
No, that's very good to hear, right? Like a lot of times when you're looking at, say, the US or China as well, there is a conversation about internal consumption driving a lot of technology being built or otherwise, and then you go overseas. And I think UPI is a classic example of us serving the local population, having achieved quite a good, tremendous success, now going out. So when you're building, we need to be, in some senses, self-sufficient or be able to scale, and then we can take things outward. Yes, I do plan to come back soon. We will bring some lessons learned from here. I think Neha's not on the call, but both of us will probably definitely look to continue coming back and helping out in the overall economy. So I'll take this opportunity on behalf of Exhibitions India and the organizers to thank all of you for your wonderful insights. It's been a lot of learning for me personally. Thank you for the audience who signed in, and apologies we couldn't take all of your calls in the limited time we had. And stay safe, wear your masks when you're outside, and please reach out to all of us via LinkedIn. Most of us are on LinkedIn, and we can answer those questions there if not here. So I will leave it to Aarti now to close the session. Thank you.
Thank you, Mushir. Thank you, everyone. Such a wonderful session, such a wonderful discussion. Very nice. And I really appreciate your time. And we'll hope to host you on some other discussion. Thank you so much for your time.